Vancouver ranks second most severely unaffordable major housing market in an urban area. Anyhow, welcome everybody to this week's episode. Dan and I are here. We're going to do a little reporting on some articles we've been reading about the unaffordability aspects of living in Vancouver. If you've recently just read the Georgia Strait, you'll see that due to the pandemic, of all things, it is part of it, but due to the pandemic, largely, Vancouver is again at the top of the unaffordability range when it comes to major urban cities across the world. We came second in the world, the most unaffordable place to live, and that is based on a multiplier of your income versus the average price of a home. And in Vancouver, you're looking at 13 times that multiple. But nowhere near Hong Kong at 20.7 times your average income versus the price of property. Now, that being said, Dan and I have been doing a little digging to see if this is actually the case. And maybe there's some ways to help you guys in buying. So Dan, maybe let's talk a little bit about who's maybe buying these homes and what does it take in terms of average incomes and stuff like that in order to get into an average price home in Vancouver?
Right. I think first to talk about this 13 times multiple, it's a bit confusing and I think misleading as well, because if you look up the average income in Vancouver right now, it's $78,000.
Right.
Okay. When it talks about that 13 times income, if you multiply your average income of 78,000 times that 13, well, you get $1,014,000. And that's very close to the average house price, right? That we have now at $1,056,000.
Right.
So when they're saying it's 13 times, I guess that means that you're trying to buy a house in 1 year of your income.
It means
With
using
cash?
or using all of your income every year to buy that house.
So a bit strange the way that they're looking at this. I find that odd and maybe misleading, but it does open the question, and one that we get all the time is who is buying? Who is buying all these homes and who can afford all these homes, right? Because we've got, yet again, record numbers. There's so many sales happening right now. We're going to see close to $4 billion worth of homes sold just in February, which will be second only to 2016 again. So sometimes that question is asked, but not really answered, but to
or
a
stated,
point or even really looked into. And what I mean by that is let's take this average income again of the $78,000.
Right.
Yes, I will absolutely agree that as an individual, you cannot afford your average $1,056,000 home based on one person's income, right? So you have to take different measures to get there generally, right? We're going to just talk averages here because this is what the article is referring to. So to buy a home in Vancouver, generally, yes, you will look at having to have a partner involved, right? Your significant other, let's say. So if two people go to buy a home with your average $78,000 income, you're sitting at $156,000 gross income annually. And the way the banks will look at you essentially is they don't want you to spend more than 44% of your gross income on housing. That comes out to about $68,000 a year, or about $5,700 per month.
Right.
Okay. So you know me, I love my numbers. So let's dig it just a little bit deeper here. Take our $1,056,000 home. You have to put 20% down because it's over $1 million and you cannot get CMHC insurance over $1 million. And we'll get to the down payment in a second here. But once you break down the actual monthly cost, right, we're including internet, hydro, utilities, property taxes, condo fees, property insurance, and even some, repairs and maintenance fees in there as well, just to put on the side. And then we're running the mortgage at 1.59%, which you can get quite easily today. Your entire housing outlay at that point is $3,868.
And that
covers your entire housing. Yeah. Sorry.
And that would be for a purchase price of about $1,050,000.
Yeah, $1,056,000. The average price today is that. So again, to remember our numbers that we just touched on right there, the way the banks could look at it and approve you was around $5,700 a month. You need to spend less than $3,900 a month with two average incomes to buy the average home price. So
Here's, and I just want to add in just quick because I think it's an important point. A lot of people think, holy cow, like that's nearly $4,000 a month I got to spend on my house. And well, I'm sorry, if you're living in $1 million plus condo, um, chances are you're going to be paying $3,500 a month in rent, paying $3,800 or $3,900 a month in mortgage means, a good chunk of that is a principal reduction payment making you wealth, right?
mhm,
So there's a big difference in how that money's getting used too.
very true, and a very important fact. Excuse
Yeah.
me. So what we're saying there, the banks will generally allow about a $5,700 per month investment into your housing, and we're saying to buy the average house, you only need to be in at $3,900 a month.
Right.
So there's room there. So when we're saying who can afford it, the average couple, the average two people can easily afford it. Now, afford it, we're talking about the monthlies.
That's right.
What I think a lot of people get hung up on or don't know the answer to largely is where does the down payment come from, right? Because to get into this house, you need almost $250,000 cash for your
Down.
down payment, your transfer tax, so on and so forth, your closing costs.
That's to achieve these numbers.
Right. Yeah, exactly. So that's I think where people go, who's affording this? Who has $250,000 lying around, that they can buy close to 4,000 homes in the month of February alone.
Yeah. And I mean, it's a good question, but I think at the end of the day, um, I know how I got to my down payment. There's a couple ways. And maybe we think we should talk about that because, generally speaking, right off the hopper, there's the biggest transfer of wealth taking place right now, in this city and generally around the world. And a lot of people are getting, their parents are gifting their money, right? Especially in a couple where you've got maybe parents on both sides who are trying to contribute, right? And they're taking that money out of the money they've made in their homes.
Mhm.
And that's trickling down into the marketplace.
Yeah, essentially what we're seeing, like Ryan said, the baby boomers that have been sitting on their property, let's say for 30 plus years
Hmm.
and have an immense amount of equity. It's likely paid off, and maybe they're getting a reverse mortgage on it. Maybe they have savings. Maybe they're in the stock market. Maybe they're in crypto, whatever it is.
Yeah.
One of my mortgage brokers mentioned the other day, he says about 90% of the first time home buyers that he sees buying right now have the entire down payment being gifted from a family member.
Well,
90%. So who's affording it? It's a lot of people who are being gifted down payments right now. Obviously, the first timers.
yeah.
The lateral moves. If people who have been in real estate in Vancouver for, let's call it 5+ years,
Hmm.
they've generally got the equity to make any kind of move up, down, or sideways. And then, of course, the first timers were largely seeing gifted payments. So that's
Well,
how homes are being purchased right now.
yeah, and the other way to generate that down payment is not trying to buy $1 million place, right? I mean, I got into the first property I could afford, right? And then from there, making good decisions and trying to look at a good time to buy. Um, you know, we made good turns and we went from a 1 bedroom to a 2 bedroom, and we kept having to flip those profits and then putting them back in order to get to a bigger place, right? And,
Mhm.
then that's how we built um, our down payment to get to where we are now, right? Otherwise, it would be very difficult to do, because saving $250,000 is a different story than paying for a monthly cost on an asset that's worth that, right?
Yeah, and of course the interest rates are driving this a lot. And again, we ran this at about 159, which puts your mortgage at like under 3,000 a month. It was only 2 years ago when that same mortgage would have been closer to a 3.59% range, and it's almost $1,000 a month more at 3,800. So
Right.
that gives you a bit of an example, right? People's buying power has increased a lot, and they know these mortgage rates are probably the all-time low that we'll ever see. So
Yeah.
they are taking advantage of it, right? That's why we're seeing this sort of land rush.
Yeah. I mean, we could go on and on about that, but why don't we'll touch on some other topics here because there's some other interesting items here. Why don't we jump into our pal Tiff?
Sure. Well, yeah, like we keep mentioning, right? Every month, basically a record breaking, not only in sales volume, but in sale price.
Yeah.
As early as last week, Tiff Macklem, the governor of Bank of Canada, said he saw no froth in the Canadian real estate markets. Fast forward to yesterday, and he's now mentioning that they are seeing early signs of excess exuberance in the housing market in Canada.
That's a funny term, but
It is a funny term. But
I don't
later in this,
I don't know if the exuberance to me seems like happiness. That's not the
no,
case for a lot of buyers.
that's right.
That's kind of out of touch.
Hmm.
Um, but that being said, it's like, well, I think what you were about to touch on is that, a lot of uh, a lot of economies right now are actually trying to run hotter because they're trying to raise the rate of inflation, right? Um, According to the governments, anyways, this time last year we're only up 1% in terms of inflation in our economy, but I'm just not buying that, especially not in the housing sector. But that being said, I think their position is that they really want everybody across this economy to try and prosper from a growing market, right?
Hmm. That's basically, almost verbatim what I think what he's saying, and that's what he wants. So they're going to continue to let it run hot, but they've now thrown an asterisk on it, saying, oh, okay, yeah, there's early signs, right? So
Mhm.
again, from no froth to early signs in a week. Yeah, by next week it might be even crazier. Well, what I mean by crazier is he may start to lean in on a little bit more of, okay, yeah, we agree that it's running excessively hot in the housing market, and to open themselves up to at least looking, at least the optics of how they come across look a little bit stronger, and a little
Yeah.
bit more listening to the people that are on the ground trying to buy homes, let's say.
Yeah, I think so. I mean, again, it's a lot of this has to do with really, really, really low interest rates, and people are going bananas around cheap money.
Yeah, right. We got residential mortgage credit. It's growing at a 10-year high right now. Okay. So what we're saying is, yes, money is the cheapest it's ever been. And the banks are looking quite liberal as far as the amounts of money that they are being comfortable lending out there, right? They're just creating credit every single day, every single week through mortgages.
Yeah.
And like I said, we're at a 10-year high, right? Not since 2010, 11 have we seen credit growth at this pace.
And then we've got some anecdotal stories. I mean, Burke Mountain is crazy right now. I mean,
Yeah, crazy is not even the right word. Like,
like
it's
not.
freaking unreal. it's I mean, it's happening so quickly.
Yeah,
I mean, Ryan, you remember when we comped our listing, the previous sort of record for a very similar home sold for 1.6 in and around that,
that's right.
right? And they just cracked it 1.613, something like that.
That's right.
And then we sold 1 month later for a very comparable home. We cracked 1.7, right? We were at 1.722. And
Yeah.
we're like, here we go.
Whoa.
Like,
Yeah.
everyone was ecstatic, great sale price. And again, this had 20 plus offers on it. Um, Another month goes by,
Too
and
soon.
yeah, this just sold like last week, a couple days ago. Now they're cracking 1.8. 1.835, I think was the number. It was up something like 115,000 for the same product a month later. And in 2 months, we've seen it go up over $250,000 for basically the same house.
That's unhealthy as far as I'm concerned. I mean, I don't know if it was, an area that's been grossly undervalued, but at the end of the day, those kind of numbers, they're not encouraging from a sustainability perspective. That's for sure.
For sure. And we're not like cherry picking like these crazy stories. This is, I mean, like 10 homes sold um, over the last 3 months in
Mhm.
this area. In December, there were 400 a foot. In January, there were 450 a foot. In February, they're now $500 a foot. Not one or two. Everything is now selling at that price range. Like,
Yeah.
it's
It's
too fast.
flying. Yeah.
Yeah, it's really, really unhealthy, and it's out of control, to be honest. I think that's the best way to say it.
And I think, there's a reason why we're bringing this up, because I think there's a little bit of a disconnect in terms of what we're seeing on a national, federal level versus what's actually happening on the ground here.
And it also, like, it begs the question, these homes every month, they're up 100 grand, and this is, yes, Burke Mountain, but it's happening Albion, it's happening all over the place. How are these appraisals coming in like at that price, right? There's no
Yeah.
comp. There was no comp at 1.8 yesterday, but then they're saying, the appraisers are saying that they are valued at that. Like, they can't be that ahead of the market to think that these places can go up 100 grand a month and be okay with it as well.
Yeah, or like we talked about, there's a big transfer of wealth happening right now, and so maybe people are paying more in terms of cash than they are in terms of finance funds, right? I mean, we know quite well that Vancouver is a pretty capital rich environment. It's not a huge credit city, right? At least on the upper end of property.
Mm-hmm.
But, I mean, we're hearing about these stories. It's not just in Brook Mountain; it's all over the place. I mean, let's talk about Langley for a second here.
Right.
A
Yeah.
crazy story out there.
I had a client look at a property, and it's a decent little, I think 1.5 acre little plot here, kind of in the woods of Langley, but it was a mobile home that was on this lot, and yeah, the mobile homes can be quite nice, and this one was nice. Listed for $999 and sold subject free for 22% over ask.
For a mobile home.
Yeah.
Sorry.
Yeah, a mobile home for 1.2 million.
And a lot of land, but
yeah.
Holy cow, 22%.
Mm-hmm.
I mean, if people are paying 22% over for mobile homes, to me, that sounds like a shortage. It sounds like a supply crisis.
Right.
Which is what we've been saying for a long time.
Mm-hmm.
And, I just fear that the government is just going to try and throw more tax at it again to try and solve this problem. And it's just not going to solve it.
Well, let's just think, what's easier to do? Try to build 50,000 homes, or just snap your fingers and say, oh yeah, more tax?
Well, certainly the latter.
Mm-hmm.
Right. But
if they tried to build more homes, they'd have to go through City Hall first. So they already know that.
Fair enough.
they probably tried, and they're like, it won't happen.
You tried building in Vancouver?
Yeah. That's
just add the tax.
That's right. and that's the unfortunate reality is we are going to see the suppression techniques coming soon. We've been talking about it for a while, and now it's we're starting to see those early rumblings. So just know that it is. And
we heard not too long ago from banks. They're starting to look at raising their rates, right? I mean,
yeah, it's happening. So banks, a couple of them have started just inching up their rates, and we can expect to see it across the board.
To go along with that too, I was out in Ladner yesterday and checking out a pre-sale project out there. They gave me a price list when I walked in, and then told me that tomorrow the prices were going up.
Yeah, well, and I mean, and that's something as a developer, if you're in a market where you can do that, you can sell out phase 1 at X, and then you can open up phase 2 at X times 5%.
Yeah.
Why wouldn't you? Because you certainly know that your 50% of your product is going to tax anyway. So one is, try to profit as well.
Cool. Well, maybe let's touch on our partners in the South, because there's some serious movement of money going down there.
Right. Yeah.
I saw anyways in Q4, roughly 1.2 trillion in mortgages was funded. It's the highest in history, dating back to 2000. Enormous amount of money.
That's it. So I mean, this isn't just a Canadian phenomenon that's happening. It's actually happening around most of the G7 or G20 countries, and especially to our neighbors to the south here, with those numbers like Ryan just touched on. I mean, highest in history as far as new credit being created through mortgages.
Yeah, I mean, there's more that's being refinanced now since back before 2003. Mortgages at their highest rates since 2006, the amount that is. The first timer mortgages, the highest in recorded history.
Yeah, that's an important one too, because that's likely happening here in Canada as well, right? So you've got first time mortgages being created at the highest rate ever, right? So you've got all these people making the lateral moves, and you keep asking, okay, who's buying these homes? Who's buying these homes? Well, it's also first timers at the highest rate in history.
Wow. What else do we have?
Investors too, right? Investors, investment property mortgages, the highest in 10 years in the States. Again, likely similar in Canada. We don't have data for that, but there's a lot of parallels often that run between Canada and the States.
Yeah, I mean, and that resulted in home prices up 9.5% in 2020 as an average, right?
Yeah, right. Again, very similar to what happened up north here.
Yeah. 182 billion in equity pulled out, or an average of $27,000 per household.
Yeah. So think about that one, Ryan. So the average house in the States pulled out 27 grand, essentially as a line of credit, using their house as an ATM. And no wonder the stock market is up, as an example. There's a good chance a lot of that got invested.
Yeah. A lot of that's going to find markets, right? I mean, if you've looked at any other market, other than maybe today, the market's tanked today. But that aside, you look at the stock market and you look at crypto and you look at the amount of buying that's taking place right now, in institutional levels too. It's not just at the residential level. It's just phenomenal amounts of money that are going into the marketplaces, and there's a lot of exuberance, I guess, in that too, right? And with low interest rates, it's you're likely going to see marketplaces rise for the the coming future, which is why you need to get involved.
Yeah, there you go. So, advice for this week, if you're competing, expect to pay a record price because they're going up that fast.
Yeah.
But again, if you are considering purchasing, we're going to keep saying this because it's still true.
Mhm.
Go and get pre-qualified, right?
Yep.
Mortgage rates are only going to go up, it appears. So get pre-qualified, lock that in for 6 months. It doesn't cost you anything. And if you decide not to pull the trigger, that's fine too.
Totally. Yep.
Right.
Good advice.
So as always, thank you so much for watching. Please subscribe to this channel if you'd like to keep getting updates from us. And for more data, always check out thevancouverlife.com.
Thanks, guys. See you next week.